Mark Rosenberg is here. He's the co-founder and CEO of GeoQuant, a software company specializing in helping investors interpret political conditions. She just talked about the tech sector, being down in this whole thing because there's a lot of business going on with tech. Starbucks is down, Nike is down. The question is, as you look over at the Shanghai in China, look at their markets, way, way down as well. So it's hurting them as much as it's hurting us.
Trade wars usually do.
Yeah.
I think what your colleague was mentioning and what is generally underappreciated is how much of U.S. trade is exposed to China. In fact, more than their trade is exposed to us. For instance, 16% of our trade goes to China, but 14% of their trade goes to us. So in many ways, the U.S., not on absolute terms, but on relative terms, is more exposed to a trade war than the Chinese.
Here's the thing, though. You look at the whole Chinese market and you think, some experts are saying this could, if China retaliates and this thing goes back and forth, this could push China into a recession. There's very big concern over there. So what are the odds that the Chinese president says, okay, we're going to retaliate once.
Right.
You retaliate, you set yours, we're good, let's move on.
I think that still is the most likely outcome, i.e. that the tariff implementation doesn't go beyond the initial 50 billion.
So not really a trade war, kind of a trade standoff.
I think it's a legitimate trade battle, but not a trade war. I do think what you need to consider, though, is that the Chinese, yes, it will hurt them economically and there may be a recession, but socially, they have a different situation than the United States. They have an authoritarian government. They can control the flow of information and resources. And there's less direct accountability to the government from something like a recession. So I think Chinese, in terms of their social capacity, probably have a better ability to weather a real trade war and a real recession than the United States.
And, Mark, this should surprise nobody because the president campaigned on this again and again and again, said, look, we're going to go after China. China is not playing by the rules. So no surprise to anybody this is coming. And the last time they were talking about tariffs, the Dow went down a little bit, really kind of shrugged it off. This time, much more of a reaction.
Look, I think, the last time the Dow really tanked on the tariff noise was around the $100 billion threat. Right now we have a $200 billion threat. I think it's more of the same in that it's a negotiating tactic in order to amp up the pressure on China. We're now no longer talking about $100 billion, and that faded away. I think likewise, this $200 billion bluster will fade into the background as the new round of negotiations get underway.
Here's the dilemma, though, Mark. You're a tech guy, right?
Yeah.
And it comes down to the fact that China's cheating. I mean, China is cheating. Let's make no mistake about it. You talk about their technology and the stealing of intellectual property and stuff. So China's not playing by the rules. We all know that. Shouldn't there be some ramifications for that?
Absolutely, there should be. And I think there's consensus, I think, among both, the political and economic interest in this country that there needs to be some pushback. I think the way this is going about it is a particularly destabilizing way, a particularly unpredictable way, and that's what the markets are reacting to.
Well, they kind of bowed when we hit them in technology, and now all of a sudden you're saying, what's the answer now? What do we do? You say maybe we should stop it right here? This is a one-time back-and-forth tariff thing? Is this a good thing, or should we have not started this in the first place?
I think you still have coming the June 30th decision by and likely announcement by the administration in terms of further investment restrictions on the Chinese related to technology. So this is still going to come. Personally, in terms of the economic damage caused by this kind of trade spat, I don't think it's the best way to go. But at the end of the day, the United States and China are going to do business together.
Yeah. Dow back below 312. Mark Rosenberg, good to see you, sir. Thank you.